at 85.75 of the pre-open suggestion. But let's welcome in Sreesankar, Head Institutional Equities at Prabhudas, Lilladher, who's joining in. Sri, morning. Thanks so much for taking the time out to talk to us today. In the middle of earnings season, how would you rate it and the outlook for the markets?
See, we in our topics and a quarterly preview have given a trading range of around 7,500 at the bottom to 8,600 at the top. But again, our view is to a great extent the market will be determined by the international flows. The flows have been extremely good. In the last 4 trading sessions we have seen the net FI flow has also been extremely positive, and that's been taking the market up into a new territory. Again, in the result season, yes, be it Infosys, it is not disappointed. Be it Wipro, it is not disappointed. Yes, and in certain cases, the commodity prices, which has moved down, probably should start to benefit some of the big FMCG companies as well. So all in all, it has been a mixed bag, to me at least, and that's where the market is. Again, we believe that the market momentum will continue to be determined by the kind of flows that you're going to see globally.
Sri, you mentioned about earnings season. I'm going to come back and discuss HUL in detail with you because that was the big earnings.
All right, Sri, what are you tracking in terms of earnings as well? Let me get your view on some of the stocks we're watching out for. One of them, of course, is also going to be Kotak Mahindra Bank. We're watching out for earnings. We're watching out to hear commentary. Anything new to do with that merger with ING as well?
I think that for that we need to wait for the results to come in and then listen to the commentary. It will be too premature to comment anything on that at this stage.
All right, fair enough. And when it comes to the larger banking space, Sri, I mean, are you still bullish on the private sector more than the public sector? Are you taking a relook? Earnings season so far has been fairly encouraging.
That has been the story for quite some time, and that's the reason why the private sector has so much outperformed the public sector banks so far in the last 12 months. That's number one. And number two, where you are actually seeing the performance of these banks or the slippages into NPAs or incremental debt restructuring, etc., private sector has done relatively much better than the public sector even now. So that's also adding up to the premium that the private sector is enjoying out there. What we tend to see is when the premiums actually go up very high, and then an argument, a case comes in for the public sector banks saying that no, it's probably at a much lower valuation than the private sector banks, and then the valuation gets narrowed down a bit. That's when the public sector banks came. That's the way the markets have always behaved. Now, coming to the way the entire the sector behaves, we continue to believe that unless we see a domestic economic growth which has happened, you're unlikely to see a lot of structural change within the asset quality of the portfolio. So we are unlikely to see a significant improvement in asset quality for the public sector banks in particular, and the sector per se, or the asset quality for the entire portfolio per se, unless you see a great improvement in the domestic economy. So since that has not been the case, I still believe that there could be a reason for slight disappointment in terms of asset quality across.
HUL,
I must add that we probably should have seen the worst already behind us.
All right, fair. Sri, just wants your focus to HUL. That was the big earning that we are keeping an eye out for. Stock had seen a cut of almost 5.5%. Today also it's down by 1%. But again, you can't really complain after a run it's had this year. But purely in terms of how the earnings played out and your views on the counter?
See, let's even look at it. Now, I think the stock has done 25% in the last 2 months or something.
Right.
Yeah, that's a kind of an expectation which was built in and the gain that had. What did the volumes growth actually come to? I think it was a 3% volume growth, and in their conference call, they also probably mentioned that it could have been closer to 5%, but for the destocking, etc., that they have done. So while our analyst continues to remain optimistic on it, but the valuations are a bit stretched. That's where we are coming from. And what we also believe is that the kind of benefit coming from the lower commodity prices, that's slowly starting to be seen in terms of a performance. You will start to see it in EBITDA margin expansion, etc. But what is disappointing is the volume growth. Again, we come back to the domestic economic growth. It's going to be a function of the domestic economy growing. Otherwise, you'll probably start to see a bit of a headwind happening elsewhere. But what we also believe is that HUL is very well placed, knowing all these kinds of headwinds and the problems that they are facing. But again, from a valuation perspective, our analysts believe that probably the fair value that we assign to the company is around 804. So you do not see much of not at all an upside in the near term for HUL. 804 is much lower than the current market price.
Fair enough. Just want to mention some of the other stocks that are buzzing in trade today. You've got Grasim and Ultratech along with Asian Paints as some of the top gainers and showing good strength. Some of the OMCs are coming back into the market. You've got BPCL gaining a little bit. But HUL, GAIL and Sun Pharma along with ITC are still a few stocks that are trading a little bit on the softer side. Suzlon, again, heavy volume seen on that counter is what we're tracking today. Syntex is up 4% on the back of good volumes. RCF, 3% higher is what we're seeing as far as that count is concerned. And Spark also continues to see decent volumes after almost a 20% gain that we'd seen on the counter yesterday as well. Sri, any themes from the broader markets, from the mid-cap space that look attractive right now? Any stocks that you've been recommending clients to look at?
See, we continue to like the financials, in the sense we believe that once the domestic economy starts to improve, one of the biggest beneficiaries has to be the financials.
All right.
Big financials being the barometer for the growth of the economy, banks especially, and that will lead through to the financials. So you've seen in the financials some sort of a disappointment coming in terms of even Mahindra Financial Services disappointed, and we got a reduced rating in it. So these stocks were just corrected, and it falls into a level one needs to look at it. Second one is the stock which we have continued to recommend even for the last many quarters has been Federal Bank. Federal Bank, again, among the private sector banks, old generation private sector banks, let me put it up that way, has continued to deliver in terms of a stronger performance, in terms of the strategy that they have, the incremental asset quality, how they have managed it, etc. So we also like some of the stocks, and especially as a theme, again we are saying financials. Look for good quality financials among the space.
All right, Sri, going ahead now, what are you watching out for? We're in the middle of earnings. We've seen most of the IT majors kind of react already. Banking names have kicked off. RIL was slightly disappointing, so was an HUL. Are you still watching out for earnings as an indicator going ahead, or else what's on your radar?
To me, I'm not looking at the earnings as an indicator. Earnings is effectively telling you that what has happened in the last quarter, for the year, quarter ended December. What I'm interested in more looking at is what is going to be the commentary of all these companies in terms about what they see for the future. That's the first part. Second is how the domestic environment is going to pan out, because the future earnings and future growth in earnings are going to depend upon the domestic environment. What will happen in our view, we probably by February 15th, we are all expecting, probably the market is getting geared up for the budget expectations. As and when these budget expectations are, and this is probably the first full-fledged budget will be coming from the government, because earlier they had very little time to prepare the budget. The expectations will be running high. We need to probably expect that you can see a pre-budget rally also happens as always in terms of an expectations. So the market is going to get into a new territory altogether. And after that, how the global scenarios turn out is going to be the key. Crux of the entire matter is going to be how the global scenario plays out. I think there is far too many variables out there where the market is going to be dependent on.
All right, Sri, we'll leave it there. Thanks so much for joining us today on the show. Lots of news to track this morning, not just stock specific, but we've got also the IMF talking.